SacOil is looking to list on London's alternative investment market in order to fuel its aggressive acquisition strategy. I'm now joined by Robin Vela, the CEO at SacOil. Robin, thanks so much for joining us today. I mean, you've obviously got aspirations to start listing, or start the process of listing on the AIM exchange in London, and you plan to do this by the end of the first quarter next year. Tell us about your strategy and what prompted this.
Well, that's correct. I mean, last week we announced our sort of change in strategy, focusing more on near production, producing assets. We also announced a joint venture with Nigeria's Energy Equity Resources. Now, having an aggressive and ambitious acquisition strategy meant we needed to also ensure that we were properly capitalized, adequately capitalized to fulfill that strategy. And being adequately capitalized means, looking to not just our local market, but also looking to offshore investment. Our local investors have been very supportive, but institutional investment in oil and gas, never mind exploration oil and gas, is limited in South Africa. And hence, natural first cause was looking to AIM and looking to London as a market for us to attack.
Have you found a lot of appetite for SacOil coming through from London and from the European investors?
Absolutely. I mean, the European market, AIM per se, has a large oil and gas presence. So the European market, the European investors are very keen on exploration in oil and gas, but also very keen on exploration in Africa in oil and gas. And hence, yes.
You're talking about an aggressive acquisition strategy and drive on an African landscape. How much money do you plan to raise by listing on AIM?
Well, initially we're not raising any money, we're just introducing ourselves to AIM. But in the first quarter and second quarter of next year, as we actually acquire the assets that we're after, we'll naturally need to raise money to do that. I wouldn't want to put a number to it, but what I will say is that we have appointed a broker, Renaissance Capital, that has a large footprint across Europe, but also a large presence across Africa. And they will be our broker who will be tasked with assisting us raise the money we need to complete the acquisitions we have.
All right, let's look at the Niger Delta, and you're talking about Energy Equity Resources, and that's basically your joint venture in Nigeria.
Correct. At
this point in time. Tell us about the strategy going forward there. I mean, it's obviously a very exciting space, a lot of prospects for growth.
Well, I mean, in Africa, if you say you're looking for near production type assets, you need to go to the most prolific address. That address is clearly Nigeria, with 2.7 million barrels of oil being produced a day. In the Niger Delta, the opportunity there is to, with our partners, acquire some discovered but undeveloped resources. So it's quite a step change from simply looking at exploration to looking at resources that are actually discovered but undeveloped. And that really is our strategy, to try and acquire those which are low-hanging fruit given the indigenization laws that have now been introduced in Nigeria, which are not dissimilar to the BE laws here in South Africa, where the Nigerians are looking to introduce new entrants into the market on assets that were typically marginal to the international oil companies, and assets that, even though there were discoveries on them, were not being developed.
That's quite interesting. I mean, tell us about the relationship between SacOil and the Nigerian government, because obviously there needs to be quite a bit of dialogue that needs to take place when you look at these potential assets.
Well, SacOil per se hasn't got a relationship with the Nigerian government directly. We have a relationship with EER. EER has a relationship with the Nigerian government. They have joint ventures in Nigeria, in the Niger Delta and other states. EER has a track record in Nigeria of actually operating, developing assets. So they have a track record of working with assets. They have a track record of working with the international oil companies. And they also have a track record with working with host communities, which is another big issue in Nigeria.
All right, looking at the commencement of exploration in the DRC, another very exciting space. And tell us about the risk factors when it comes to working in the DRC.
Well, naturally, whenever you talk about the DRC, everybody's always worried about security. But we are going to the DRC as, if you like, invitees of the DRC government. And we're hoping that they would lend us security. That said, in that region, albeit on the Uganda side of the lake, there are other operators operating. I mean, there are known discoveries that have been made. So we're hoping to learn from the experiences of the other operators and operate in that manner.
Exploration and investment into the oil and gas industry, we know, dried up when oil prices hit as low as around $30 a barrel. That's changed quite vastly. We're sitting at around $80 a barrel, despite the fact that there's still a lot of talk about double dip scenarios and a lot of concerns about very slow growth on a global level. Because you're on the pulse of this, tell us what your experience has been in terms of what people expect the oil and gas industry to do over the next few years, and also from a demand perspective.
Well, I think it's slightly shifted from investors are now looking to cash, near cash, hence, our drive for near production producing type assets. Historically, exploration was flavour of the month because of the higher margins that can be achieved if you do make the discovery. Where we're positioned is we're positioned at the point where we are looking for assets that are discovered, so we know there's oil. We're not hoping there's oil, we know there's oil, but assets where we have a sense that we can bring them to cash within 18 to 36 months.